Good morning, good afternoon, good evening, and welcome to the Friday the 29th of July, the TGI Friday. Thank God it's Friday the 29th of July. Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone, wherever you are on the planet. Morning, afternoon, evening, if you're in Asia, Europe, London, UK, Americas, north, south, wherever you might be, guys. Welcome. So we're going to go through our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at the earnings calendar as well as the data, the economic data calendar. We'll take a look at the earnings calendar, what we've had, what we've got coming up. We'll also take a look at some articles from the major news wires, what's impacting markets right here, right now, what are the fundamental macroeconomic geopolitical events that are shaping markets. And then we'll take a look at the charts. Where are the trigger points for today? Where are the opportunities for today? Let's kick off with the calendar. So no real impact from yesterday's events or not too much from today's European data. We've had some French CPI data come out bang in line with expectations. French GDP beat expectations. German unemployment worse than expectations. A real kind of mixed bag. CPI for the Eurozone as a whole and GDP for the Eurozone as a whole above expectations. So a mixture in here from Europe. No real significant impact from that data overall, though net on the stock indices. If we go take a look at what the European bourses are doing this morning, yes, they're up. We're up between 0.5% and 1.5%. So you see here the FTSE up 0.5%, the German index just over 1%, the French index, the CAC, nearly 1.5% up. But that's playing catch up, remember, for two things really. One, the kind of latter day. Remember that these markets close anywhere. These are the cash markets, European time, somewhere between 4, 5, 6 o'clock, depending on the market. And so that's on the, if you think Eastern time, US, we're talking about 1, 2, 3 o'clock in the afternoon, something like that, right? So this doesn't pick up the late rally that we definitely saw in stocks. And not only the late rally in stocks, but then the post-market surge that we saw given the very good numbers that we saw, which I'll come to shortly, from Amazon and Apple. Right, so that's why we're up in here, and that's why it's not really picked up here. So yesterday we were up at the cash market close, and we're not seeing actually. Yeah, this is terrible the way this doesn't load. But we're up like 1.5%, nearly 2%, I think, on the Nasdaq. But leapt higher overnight. Nasdaq's up another percent on the future, and it already leapt obviously into the close anyway on the futures close. With the release of that of the earnings reports from Apple and Amazon. So a really strong day yesterday, both pre-close and post-close, post-cash market close for the stock indices, having posted a really solid day the session before on Wednesday in the wake of the Fed, and what is still being seen as a slightly, I'm not going to say dovish, but a pivot from Powell to say, maybe the next hike's not going to be a 75, and then maybe, they're still really running aggressively hawkish on inflation. They've told us that. It's going to be really interesting. I said this yesterday. It's going to be super interesting to see how people look at, or the market, not people, the market reacts to, what the market's already reacted, and how the Fed now react to how the market's reacted. Because the market has reacted like the Fed have shifted very dovish. A lot of, as we said yesterday, a lot of Fed watchers are saying that the Fed didn't really do that. But that's how the market reacted. The market reacted like it's, the Fed are flagging, rate line, and the Fed are moving to more dovish, and here, if we look at the dot plot chart, is sitting at 7. It's not the dot plot chart. Forget that. The CME Fed Watch tool is showing us, the next meeting in September, like just less than a couple of months away. In here, we're only looking for a 50 basis point hike, 70% chance of 50, and only a 28% chance of a 75% basis point hike. And we looked at this yesterday that, if we go further out, the peak in rates comes at the end of the year at the 325, 350 level, okay? So that's another 100 basis points up from here. So maybe only another 250 basis points hikes. And then that's maintained through February, 325, 350. And then March, you got them 325, 350, but is not the peak anymore. By March now, we're saying potential for lower rates by March. And certainly by May, then we're at 300, 325. So by May, we're looking for lower rates. So the Fed, the rate cuts now have slipped in. And this was above this one yesterday. This is the March tab, right? So by the March meeting yesterday, when we looked at this was above this one, okay? So it was saying that, now there's more chance it's going to be a rate cut coming earlier, as early as Q1 next year, right? And that's because fears of, obviously moving towards a recession, because the Fed have been quite, aggressive, I would say, compared to what, they were behind the curve a couple of months ago. And now, if anything, they've got ahead of the curve. And they're more hawkish than the market. So it's going to be interesting to see whether the Fed start backtracking a little bit, or not even backtracking, but basically telling the market, you know what, you're thinking we're going to be pivoting towards a little bit more dovish than we were. That's not the case. We're staying very hawkish on inflation. So that's going to be, I think, the real interesting development when we get further Fed speakers over the next week or so, to see if we get some kind of shift in the view. I'm not sure when they go on recess. They may. I'm not sure exactly where that happens. Whether they all go on recess and they don't speak through the summer or not. There's obviously no meeting in August. Whether they don't speak, whether they're embargoed from speaking, I'm not 100% sure on that. So I'll look into that. We'll report back on that to see. But I think if we go and actually look at, you can go to the Fed's own page, Fed speakers. If you do that, I think then it's got the Fed engagements. Here it is on the Fed calendar. So this is July. We're not really interested on July anymore. Can we go to August? Because July is up today. So look at August. We've got Fed speakers in August. Why is that not? Okay, submit. So in here, I don't see anything slated there. Just go back to July just to make sure. Or actually, let me go to September. So there's nothing in there actually on the speeches front. Speeches. Let's tick the speeches book for August again. Nothing. Interesting. I don't know. Maybe they are embargoed, or maybe they just don't update the calendar very often. There's the stuff in July. Okay. Anyway, we'll revisit that, but we're certainly watching out for Fed speakers, guys. So yeah, data front today. Let's switch back to the data front. We've got core PCE today, right? It's important. Why is it important? PCE, personal consumption expenditure. The Fed tells us this is their preferred measure. This is what they think is the important measure of inflation. The PCE data, not the CPI data. Okay, the market moves more on CPI. Always has done. The Fed tells us they watch PCE. Okay, so the market doesn't take that fully on board. However, the market does move on the PCE data, even though not as much as on the CPI data. So we're certainly watching it. PC data in it's under an hour now, 51 minutes. Okay, so we're watching out for that. We've got the month-to-month and year-on-year data. Okay, so we're the core and the headline data. We're watching out for that. So that's going to be important today. And then a little later on, we get Chicago PMI. That's 9:45 Eastern, and then 10 o'clock Eastern, Michigan consumer sentiment. That's the tail of the tape on the data front. Let's take a look at the earnings calendar. I'm going to go back to yesterday first of all. So yesterday, Apple and Amazon, big wins for Apple and Amazon yesterday after hours, okay, and positive forward guidance. The stocks absolutely surged higher yesterday. We'll talk about a little bit, but after hours trading and this morning in pre-market trading, looking really bullish going into the day. It'd be really interesting to see if they can hang on to those gains and whether they can drive higher when obviously, you can't invest in them, right? You can't buy the stock, right? So even though the Nasdaq's up, even though, any kind of futures might be up, the actual real stock, will big buyers come in, on these leaps higher that we're seeing in these stocks in the post-market last night and pre-market trading. That was yesterday. Let's go take a look at today. ExxonMobil's already out, and there's an article already on here. Record-breaking second quarter profits. Yeah, no surprise the oil guys are doing well, right? big shock, right? We're given where the oil price has gone. So ExxonMobil. So if you look in here, most of the, remember, this is already sorted by market cap. So the big boys at the top, a lot of those big boys are already out. ExxonMobil beat. Procter and Gamble beat on revenue, slight miss, only a slight miss on earnings. Chevron beat. Okay, so these all have beaten here. You can see sea of green pretty much at the top. So again, a positive in here, running into today from what we've seen so far on the earnings calendar, and nothing really to worry us for the rest of the day now on the earnings side. Let's go to see Bloomberg's recap: 5 things to note to start your day. Incidentally, guys, anyone? So we got on Jason. Hi there, Jason. Anyone else want to say hello in the chat? The chat box is just below the live stream. And if you want to say hi in the chat, I don't know if you guys sign up to this, but if you go to Bloomberg's homepage, so in here, Bloomberg Markets, so bloomberg.com/markets. If you go here, can you see this when I post this in the chat, guys? We did test this yesterday. I've just posted in the chat. It should pop up, So if you go to, hi there, Kaz. So if you go to Bloomberg homepage in here, bloomberg.com/markets, over on the right-hand side here, okay, you can sign up for the email, 5 things to start your day. It will give it to you, right, in your time zone. So it'll come in like, you'll get it. I get it my time. I'm in Europe, so I'm in the UK. So you can see it. Cool. So if you click on that, you can go to this page here. You sign up over here on the right. You get 5 things to start your day come into your inbox. Okay. So that's a morning email. So when you wake up in the morning, it will be there, and it just gives you a little recap on what's happened after night, what you've got coming up. It's here on the site anyway, but it's nice to get it into your inbox so you can have a quick flick through. I tend to, first thing I read when I'm in bed first thing in the morning, sad as it is, when I wake up, I check the emails in there and I just skip through, see if I've missed anything overnight. Okay. So Biden touted low unemployment, job creation, and foreign investment signs the US isn't in a recession. Yeah, blah, blah, blah. Thank you, Biden. Doesn't mean anything to us as traders. Upbeat earnings. This is more important. Amazon and Apple set to add almost $230 billion in market value Friday. Bang! $250 billion added overnight. Wow. Soaring in post and pre-market upbeat earnings. Yeah. So really strong. Amazon beat sales forecasts and it's starting to rein in hiring and focus on cutting costs. So Apple beat analyst revenue expectations as well. Nothing much more in here. Energy crunch. Yeah, that's not. So this is just ongoing European energy issues. Spain is turning on the taps, helping out France. By the way, that kind of on their liquid gas. So that's seen as a positive. US futures rallied at the end of the day, and I got a few articles in here now. So what have we got in here? Wall Street ends up sharply for second day. We know that. Amazon, Apple jump after hours. But these ones in here I think are really interesting. US futures, stock set for best month since 2020. Unbelievable, right? God, and I think this is more. I've been saying this for weeks now. The bottom's been going in since June. I think the bottom's fully in now. It went in last week. And I think, the price action over the last 2 days has told you now we've got players coming back into the market. Yeah, we spoke at the beginning of this week. Do you remember we spoke about the fund manager survey? It used to be the old Merrill Lynch. When I was at Merrill Lynch, it was the Merrill Lynch fund manager survey. Now it's at morning from Texas. Morning Tony. Hey. We've got we spoke about the fund manager survey. It used to be the Merrill Lynch, now the Bank of America fund manager survey. That's been out for decades. I've been out. I was there for 15 years at Merrill Lynch, so I joined Merrill Lynch in the 90s, and it was running then. So that survey is 25 years old or something like that, I think, at least, maybe longer. And that showed, I think, it showed. Let me actually bring it up. I think this is just something we can just linger on. It's not the Bank Merrill Lynch BOA Fund Manager Survey. There it is at the top. We spoke about it at the beginning of the week, right? This article here. Global optimism an all-time low in the fund manager survey. Yeah. And they were the most underweight since when was it? Okay, so global growth. So look in here, most underweight, I think, of stocks since most risk averse since 9/11. Okay, even through where we were look here in the financial crisis. Okay. So fund managers are extremely pessimistic. That's bullish. right? It's a contrary indicator, right? Why is it bullish? Because they're underweight. As the market starts going back up, they've got to start putting that cash to work. They're sitting on more cash than they've sat on, right? Okay, for a very long time. Oh, Michael Hartnett's still there. Wonderful. I used to work with Michael, top guy. I didn't realize he was still there. There you go. Yeah. So where was I? I'm losing track. I'm losing my thread. Reminiscing. So yeah, fund manager. This is bullish as well. Yeah, and so there's money to go to work. Look, so stocks set for best month. Can you believe it? Best month since 2020. Dollar going lower as well. Why dollar's a safe haven? Dollar yen's plunged. There's an article on that as well. This is a real big worry for the FX markets, right? Yen advances to levels that threaten this year's big FX short. The big short was the yen, right? That everyone bought. Dollar yen has surged. I mean, it's been a super aggressive move on dollar yen, right? Why? Because the most hawkish central bank on the planet was the Fed, and that emerged throughout 2022. And the Bank of Japan have stayed uber dovish as they have been for now over 20 years, right? And they haven't shifted from that uber dovish move, despite the fact we've got global inflation hitting nearly double digits, right? They stay super dovish. They're not moving their interest rates. They're continuing their bond buying program, their quantitative easing. So no surprises, dollar yen blows out, right? It's all about interest rate differentials, yeah? Interest rate differentials. Interest rates in the US going up, in Japan going nowhere, still sitting at zero sub-zero, right? So the dollar is preferred over the yen. That's become a very crowded trade. The big shorting the yen, that is, and now yen has turned. There was a big move for dollar yen down yesterday, up for yen, dollar down, yen down. And then again, this is a reflection of moving away from a risk off, moving into a risk on. Ridiculously, normally the yen is seen as a safe haven, but the yen rallying is because of this crowded trade and the dollar seen as the choice as safe haven. Why is the dollar the choice as safe haven? Because it's got the higher interest rate than the yen. Okay, so we've seen this across the board. European stocks set for biggest monthly gains since November 2020 as well, going into today. Remember, it's month end. You know, when it says stocks here, it's talking about European, US stocks. Okay, stocks in the US and Europe set for their biggest gains. Okay, we've spoken about Japanese yen, Bitcoin and Ether as well, tracked for their best month since 2021. Yeah, we're seeing a positive correlation throughout 2022 with between crypto and stocks, particularly the Nasdaq. Right, Bitcoin's been in a big bear market. Crypto's been in a big bear market. I'm sure you're all aware of that. This turned over the last, again, similar basing pattern in here, seen through June, July. I've been rallying for the last 2 weeks in here, okay, in line with the stock indices, okay. So all of these markets, FX, and I spoke about this 2-3 weeks ago, started to talk about the turn in the dollar. The turn in the dollar. Was the turn in the dollar telling us that we were now moving into a risk-on phase, okay? And global bonds as well. Surge for their best month. Yeah, bonds going up in price, lower in yield. Why is that lower in yields? Because of recession fears. Okay, because of recession fears going forward. We had inflation fears, bonds sold off. Now we've got recession fears, bonds going up in price, down in yield. Why down in yield? Because there's the thought is down the line in here we're going to have a recession, yeah, and then also the interest rates are going to be going lower down the line. Okay, further out. We've already spoken about this. European stocks up and overnight in the US stocks we've done that as well. Right, let's take a look at the charts. A massive, we spoke. I didn't expect these targets to be hit. I put the fibs on yesterday. If you were on the call yesterday, you'll know I put these fibs on. We were sitting and flirting with this 38.2. This is the S&P, by the way. Sorry, I'll recap. This is the ES on September contract. We were flirting with this 38.2% retracement of the sell-off from here, from the end of March. Okay, and we took that on the day before. Okay, we've taken that out. We not only there, we also took yesterday the 38.2% retracement here of the whole sell-off from the beginning of the year. This is the whole bear market. So we're back now through the 38.2% Fibonacci retracement. We're also getting closer now to the 50% retracement of the down leg from late March through mid-June. Okay. And also these important peaks up here. I don't think we're going to attack these today. Yeah, I think the market's had enough today. But given what Amazon and Apple are doing, right, you could see false buyers coming into those stocks. You could see false buyers coming into the tech sector. Are these guys going to want to miss out? We could come in on Friday, on Monday, and leap even higher. Okay, so my thoughts are, it's a tricky one. We've had a really big up 2 days, right? So it might not be the day to be buying today, but going further out, I'm certainly bullish in here. And it's the same story for the Nasdaq. We looked at this yesterday. The Nasdaq was sitting and flirting with a 38.2% retracement of the down move from late March through mid-June. We blitzed through that, and not only that, remember the S&P, these peaks over here are from the beginning of June. Remember in here, the S&P is some way away from these peaks in here for the beginning of June, okay? But the Nasdaq, boom, right on them. We've gone right up there yesterday. The high from the beginning of June is 12,973.75. Where are we now? The high has been 12,948. That's going to be critical. If we can take that out, now I know we're dipping, but if we can take that out, this could blast higher. And look at this confluence of retracements. Yeah, this cluster of retracements. Just above that peak there, we've got the 38.2% retracement of the whole sell-off it's actually from the end of last year. It's pretty much around Christmas, right? Christmas last year, right? Through to mid-June. The 38.2% of that move, and then of also the 50% of the move from late March through to mid-June. The 50%, you can see it there, of that move. They are almost on top of each other, and they're going to be around 13,150, 13,180 kind of area. If we take out that peak there from early June, which is 12,973.75, we could sprint up to this confluence of retracements in the 13,150, 200 kind of area, let's say, right? We could easily attack that. Is it going to do it? Right, let's stay with the Nasdaq. I'm jumping around a little bit. The worry here is obviously this roll lower. There's the sprint higher. We'd already rallied right into the close. Here's the close here. And then we added on, boom, another with the Apple and Amazon moves. Now the market's retraced, but it's still holding above where we kind of closed out here, right? This is where the actual the market closed, okay? When the cash market closed, and this is the post-hours move, okay? So even though it's dipped, I wouldn't be surprised if we dip a little bit further into here, but I think on the cash market open, it's going to swing. I think what you do in here is you wait for the counter trend line to be broke. So you've got this counter trend line coming down from overnight. And I would want to wait for it to get back above there. Now on the Nasdaq, that's going to come in right now. It's around 12,882, 880, 882. Okay, this is on the 15-minute chart. I want to see it above there, or if not above these little overnight peaks, which are 12,898. So back above 12,900. If you want to go through the trend line, it's around 880. If you want to wait for the peaks there, 12,900. I wouldn't want to buy it until it breaks through there, but I'd be happy buying on the break there. And then this could easily add in, a couple of percent on the top side, right? Minimal, you'd expect it to extend, 1% on the upside. So there's got plenty to do on the upside there. Let's take a look at the similar on the S&P. So again, here's the close, okay? And there's the bit we added on, okay? From the Apple and Amazon, okay? And look at the S&P, far more resilient. Hasn't given much of it back. We're dipping lower, holding. So it's dipped and rebounded, dipped and rebounded. We've got now higher highs and higher lows. This is on the 15-minute chart in the morning trade, in the overnight morning trade, right? This is like the Asian European session, right? We've got a little session of higher highs and higher lows. We don't really have that on the Nasdaq. You go to the Nasdaq, it's actually gone sideways and it's trailed to lower lows and lower highs. So Nasdaq's looking a little heavier. No surprise though, because it gained so much more last night after hours. Remember, this is where we closed out. This is the 9 o'clock. This is my time, 9 o'clock. This is where we closed out. That's where we closed out there, right? This is the ding, ding, ding. This is the bell on the cash market there. That line there. So we're way above that, right? And that's post-market, boom. So we've still got most of the post-market rally intact. In fact, if I do the fib on it, let me do the Fibonacci on just the post-market move, just that move there. Whoops. Let me just pull that across. So we're sitting on about, actually I've done it around the wrong way here, but it was sitting on about the 61.8. So it's holding at the 61.8, and that's not very well drawn, is it? Of the post-market rally. We're around that kind of level. So it's kind of holding in. Not great on the Nasdaq, but if we go back to the ES on the 15-minute, it's holding in. Oh, what's happened there? this is holding in well. Higher highs and higher lows, right? You got this little uptrend line here from the overnight, right? Here. It's like flirting with it now. It's kind of holding. I think you just wait till it breaks the over. I wouldn't want to buy it till it breaks. You got the overnight high there. On the S&P, the overnight is, where's that? 410875, and then the actual high is not much above there. 4111. Okay. Now you could zoom in a little more, all the way to like a 15. Bear with me a sec. Whoops. We could go into the 5 minute, and you got this little downtrend here from the last, what's this, the last 2 hours? 1, 2, 3, 4, 1, 2, 3, 4. Last 2.5, 3 hours. If you want to be aggressive, you buy the break back above here. You got this little downtrend line here, and the market's like stabilizing. You've got a little few peaks in here. You can buy back up for them. Got a few low highs. I want to wait for this to turn. I'm not buying this now. You want to wait for this to turn, guys. It's kind of holding this low here. This low over here, the swing low is 40.96 and a quarter, and the low at the moment currently on this move is 40.96 and 3/4. So it's just holding. I want to see it hold this low. Certainly want to see it hold that one there. That one over there is 40.93.75. Definitely want to see it hold there. Preferably hold that one there. All right. So it's still setting up bullish. Don't want to buy it yet, right? Don't want to buy it yet. Want to wait for it to swing, right? Wait for the next swing for me, because we are tracking lower, And this is just a natural correction of the fact that we had that, not only the initial boost, but then the secondary boost after hours, right? So it's a natural consolidation of that. Market's trying to find its level. It's trying to find where Amazon and Apple should open, and we'll know a lot more come the cash market open. In 90 minutes. So I think that's going to be critical, probably more than the data. But watching the data as well, you got the data in 30 minutes. I'm going to wrap it up there. TGI Friday. Thank God it's Friday. Guys, I'm going to wish you all a great trading day. Keep the stops tight. Yeah. Track your stops up. Speaking to one of our traders yesterday, don't forget to track your stops up. Don't forget to be brave. Kind of run those profits. We'll see where we go today. Have a good one, guys. Have a great weekend too. I'll be back with you on Monday with another bull versus bear webinar. Take care.